Hello and welcome into the KE Report. I'm your host, Shad Markowitz, and today we're getting an update with our friend and colleague, Jayant Bhandari. Jayant is a private strategic resource investor that consults many high net worth individuals as well as institutional investors. And so we always like getting his take on the resource markets and also just what he's looking at as he travels the globe and looks at the commodities. Giant, since we've talked in April, it's been a wild couple months. We had the tariff tantrums in April, and then everything did a V bottom and shot higher. The general stock markets in the US, the cryptocurrencies, but of course, the commodities have done well over the last few months. As far as gold, since that's something we usually focus on, and a lot of the companies we talk about are in the gold market, it looks like gold shot up to 3,500, has consolidated the last couple of months, just kind of churning sideways in the 3,300s and 3,400s. But when you look at every currency on the planet, gold's up near all-time highs. What's your take on the future of gold? Can we keep this momentum going? How are you looking at the yellow metal?
Thanks for having me, Shad. I continue to be very optimistic about gold. It is not a price that I would buy gold at because I think about things several years in advance. I'm not going to buy myself anymore, but I think it's going to consolidate and continue to improve over the next at least a couple of years, in my view. I think the political problems are here to stay, and there will be a lot of volatility in the market, which means that people will be scared about their wealth and they will, as a result, continue to hold on to gold.
One other metal that we were talking about off mic before the call is copper, the red metal. A lot of people look at copper as the economic diagnosis of the economy. And you're out traveling the world, you see many different countries. There seems like there's been a mixed current of a lot of people worried about an economic contraction. But when you see copper above $5 a pound, it tends to believe that there's a reflation trade, that there's growth on the horizon. How are you looking at the economic health of the globe and how copper plays into that?
Well, I have spent a lot of time in China this year, Shad. And the last time we talked, I was in China. And Chinese currency has actually improved quite a bit over the last few months. So USD to renminbi ratio has improved in favor of China. And I continue to believe that China will do very well for the next few years. Now, there is a lot of fear in the market, even among Chinese. But whatever I see and the perception I get from traveling around in China, meeting companies there, is that China will continue to do very well, and it's not going to be as bad for China, the tariff war with America, as many people think it would be.
Yeah, I think that some of that news gets a little overblown about the weakness of China based on what you've shared and what other guests have shared in traveling there in country. They're seeing still a lot of growth, but it still should bode well for the commodity sector since people call China the mouth of the world as far as they have so much manufacturing, so much industry, so much refining, so much smelting that they end up consuming a lot of the commodities, which will be good for the copper space as well as a lot of other commodities. Well, I guess let's just dig into some of the companies that are on your radar. We always like to find out if there's any good arbitrage trades on your radar because you like to capture the delta between the company being taken over and the acquirer. And one of the ones you mentioned to me off mic was Mandalay, who is merging with Alkane. This is a gold company, a producers, both of them. And you mentioned there's a good arbitrage trade in Mandalay Resources.
Yeah, surprisingly, I just had a look at the share prices, and Mandalay's arbitrage has shrunk to only about 2% right now. So I would wait for a couple of days before I would buy more. But typically, the arbitrage of Mandalay has been about 5 to 10%. And the merger should close very early next month. And if I can make 5 to 10% a month with my investments, I'm extremely happy because that effectively gives me an annualized return of close to 100%.
Yeah, making 5 to 10% a month is a great job as any investor to make that kind of regular income. Now, let me ask you, do you then sell after the company merges, or do you have any interest in holding on to the pro forma company?
Well, so I don't follow the two companies right now. The balance sheets and profit and loss accounts of the two companies look reasonably good to me. that I will have a look at the merged entity once this deal is over. I have a feeling that I will probably hold on to it. And I'm actually thinking that Monday will fall quite a bit before the deal closes. And the reason is that whenever there is a cross jurisdiction merger, people of the merging entity becomes, for whatever reason, very scared and they start dumping their shares just before the merger closes. So I'm looking for something like 5 or at least, or maybe 10% arbitrage before I buy more of Mandalay Resources. I already own a lot of it, but I want to buy more as we get closer to the closure time.
Okay, just curious how you were going to play it, but you will look at after the closure if you want to continue.
Absolutely, because the numbers look very good to me on both the companies. Mandalay, I think, is trading at P by E of, if I'm not wrong, about 6 or 7. So it's really good numbers. Of course, the life of their mines is not all that long, but the balance sheet and profit and loss account as it stands today is very good.
All right, that's a good one for people to take a look at. And they're both operating in Australia, if memory serves me, Alkane and Mandalay. And Mandalay also produces a little antimony, which is another metal highlighted right now because of the Chinese export bans on it. So definitely something to take a look at. Now, shifting over to copper, we talk a little bit about Granite Creek Copper, traded on the TSXV under the ticker GCX, merging with Cascadia Minerals. So give us a rundown of this arbitrage trade.
Now, this is the something that I would buy a lot more of. And this is the reason why. The arbitrage is about 16% in owning GCX, and it's trading at 4 cents. I have been buying GCX when it was 3.5 cents. Now it's currently 4 cents. And the merger should close sometime this month. So 16% within a month is an extremely good arbitrage. And because the acquiring company recently did a financing, I don't see a reason for Cascadia Minerals, which is acquiring GCX, to fall after the merger is closed. So I'm very optimistic about this arbitrage trade.
All right, we'll keep tabs on that one too, but that's a pretty big spread between those two, so you get a little bit more bang for the buck on that arbitrage trade.
Yeah, but and this is what happens when share prices are in pennies, because a lot of people don't see much difference between 4 cent and 4.5 cent, but the difference between 4 cent and 4.5 cent is 15%. So that's where the delta is, and this is a reasonably assured way of making money in my view. And if you can really make about 15% within a month, you actually make close to 1,000% annualized in this arbitrage.
Well, let's hope that we can find a few more 15% arbitrage trades out there then in the months to come. But yeah, that's a good one. And it's an interesting company combining two copper explorers together into a larger company that'll have resources and even some economics on some of the projects. So interesting in the copper space to see a little consolidation. Now we're shifting over to the uranium sector. And one that you brought to my attention was nuclear fuels, traded on the CSC under the ticker NF, is being taken over by Premium American Uranium. And this nuclear fuels is an exploration spinoff from Encore Energy, which is a U.S. producing company. This is their exploration arm. So you're seeing a merger here of two uranium explorers. What's the arbitrage trade here, Giant?
So, nuclear fuels is very illiquid. So, people have to be very careful about it. I would give a stink order for it, but the arbitrage currently is 15%. The negative aspect of this is that the deal will close in September. So, I would certainly sit on stink beds on this. I have accumulated a lot. So, I think you should be able to buy nuclear fuels for something like 30 cents if you're patient enough.
All right, so maybe put some of those stink bids out there, a limit order, and just see if they get filled on certain days in the market, but then be cognizant of the fact that the actual merger is not still for several months. So you'd have to sit on that for a little while. So a couple good ideas there in the arbitrage space. Now, I know that you're also keenly interested in some of the companies that have active drill programs for this season. A stock that we usually check in with you on is a friend of the show, Simon's company, Aztec Minerals, traded on the TSXV under AZT. They've got two projects, the Cervantes project and the Tombstone project. A lot of good action in the stock recently. What is your take and update on Aztec Minerals?
So, Shad, I own a lot of Aztec Minerals. I have owned it for many years now. I'm very impressed with how Simon moves with the projects. He's a go getter. He raises money and starts putting money in the ground. And he was already organizing drill rigs for the Tombstone project while he was raising money. I gave him a lot of money for this latest financing, and it is only trading about 10 or 15% higher than what they raised money at. They are looking for the feeder zone at Tombstone project. They are drilling deeper this time. And so this is a bit of a drill play from that perspective, but at the current share prices perspective, it isn't, because the blue sky that might come from the feeder zone is not really a part of the share price right now. So this is, in my view, a good price to enter Aztec Minerals if I did not own it already.
Well, and we've had, again, Simon on the show a number of times, and we've talked about Cervantes, which is a little bit more gold focused. What has some people animated about Tombstone is that in addition to the gold, you have the silver there, and then they're going to go down and test that CRD deposit at depth, which sometimes is polymetallic. So, are you more excited about Tombstone, or are you more excited about Cervantes? What got you in and what's keeping you in?
I used to like both the projects very much. I am focused mostly on Tombstone right now. And the reason is that, in my view, the share price is pretty much underpinned by the value of Tombstone. So I'm getting, in my view, Cervantes for pretty much free. And also, there has been negativity about Mexico's mining law over the last few months. So I have a feeling that the market is not interested, and I'm not all that keen either. But if Mexico becomes positive in the mind of investors, then the share price has that additional upside. And also remember that Alamos is a big shareholder of Aztec Minerals, and the reason they are shareholder is because they have their eyes on Cervantes project. So let's see how that moves. But for now, I'm getting that all that upside for free, in my view.
Yeah, so it may get the jurisdictional re-rating as people shift to a more favorable view of Mexico over time because it's been in the penalty box the last couple of years, but it does seem like things are improving slightly there as far as permits and moving projects along. Alamos actually was one of the companies that did get permits in Mexico this year, so if they're looking at Cervantes, you have that potential. But then Tombstone, being in the U.S., you have the other kicker of, a domestic play that's got some life in it as well, and it's got a storied history behind it as well. So we'll definitely keep tabs on Aztec. Let's also shift over to another company we've discussed in the past and just get an update. Going all the way to Japan now with Irving Resources, traded on the CSE under the ticker IRV, looking for gold in Japan, just recently cashed up as a company. What's the strategy with Irving for this year?
So Irving has two major projects. One is Omu project in Hokkaido in the northern part of Japan, and the other one is Yamagano project in the Kyushu province of Japan in the southern part. Both projects are being drilled. I'm told that in Hokkaido at the Omu project, there are three rigs running, and the fourth is on its way to start drilling. Now, these are small rigs and they drill only 5 or 10 meters a day. So these are very slow rigs, but they are pretty much moving the Hokkaido project towards a situation where they can start doing mining. This is something like 1 gram per ton grade gold. But the reason JX Mining, which is their partner and the operator at the project in Hokkaido, is drilling that project is because they want to mine it for silica. So Irving is interested in gold, but JX Mining's motivation is silica. It's a very high purity silica, which is very useful for refineries as flux. And their hope is that within the next 2 or 3 years, they might be able to start mining there. It will be a quarry operation because you mine it and send it to smelters for as flux, and Irving will get paid for gold. In the southern part of Japan, Irving has a joint venture with Sumitomo and Newmont. They are cashed up for that project. It's a joint venture. From what I understand, Irving has enough cash for the next 1 year. The only negative thing here is that Irving raised money at 20 cents, and I gave them a lot of money this time, and their share price is about 30 cents. So it's already up 50%. So people have to be mindful of that. But they are drilling at the Yamagano project. These are very deep holes, and it's a high risk, high reward play in my view.
All right. So for investors that have that temperament to take on a little bit more risk, it's a swing for the fences play where some of these targets are big. And if they hit, it could be meaningful as far as the projects and the ability to build resources in country. Let's wrap up talking about the event that you're hosting in Vancouver, Canada. This is on August 22nd and 23rd, and it's your annual Capitalism and Morality event. I was at the event last year. It's a great event. I recommend people that are within driving distance to drive into town for it, or if you're in Vancouver and you're listening, definitely a good event. Share with people listening a little bit about the speakers and the format and what they will see at Capitalism and Morality in 2025.
So, Shad, I have been running this seminar for the last 16 years, and my interest is to have a philosophy related seminar in which we talk about Western values and about things which might not be openly discussed elsewhere. I have had Doug Casey for many years. He's not coming this year though, but Rick Rule has consistently spoken for the last 6, 7 years. Adrian Day has been there many times, not this year though. Amy Wax, her husband Roger Cohen, who are very well-known people in the US, are speaking. Jeff Deist, who was the right-hand man of Ron Paul, is speaking. So there are about 11 or 12 speakers at the seminar.
Yeah, and people listening to the show for many years know that we used to have Jeff Deist on the KE report, and he was the head of the Mises Institute at the time, which is more of a libertarian think tank. So interesting kind of philosophy, politics, economy, and morals all woven into one. And for people that want more information, I will put a link to that down below in the show notes so you can click on it and get registered for the event. I plan on being there myself in August. Again, that's August 22nd and 23rd. And Jayant, it's always great having you on the show. So thanks for being our guest again here at the KE Report. And as always, looking forward to our next conversation.
Thank you very much, Shad.